Well, gentlemen, thank you very much for being here today. I mean, it's very special to have Ning Tan from CreditEase, which is the largest lender in China, as well as Dai, really pioneering the online lending space from start to finish. So today we want to start off with something maybe a little controversial, but you've all heard about the issues related to the lending club in the US and really how that's impacting the capital that's available for the alternative lending platforms, not only in the US, but somewhat globally. So I want to start with Ning. I want to say, Ning, how is this affecting China, and does this really impact CreditEase?
It's actually not directly related to China, and our understanding is that the U.S. market hasn't been very easy since last year, mainly because on the funding side there has been quite some challenge as hedge funds got into some problems in other asset classes, but had to withdraw from this marketplace lending. So I think that tells us that marketplace lenders, P2P platforms, should always try and diversify their funding source, having a fine mix of institutional lenders and retail lenders. And in China, we see that supermajority lenders are individuals. There are more and more institutions trying to get to the platform and lend, which we believe is a good thing because institutional investors are more experienced. But if we can take any lesson from the US market, it should be that platforms should keep a balance between institutional and retail lenders.
That's great. Thank you, Ning. And Cliff, maybe you can talk about the diversification of lenders on the platform, and how do you see building that going forward for Dai?
But actually, I agree with Ning, and I want to end my points about the scandal of Lending Club. Actually, the scandal happened in Lending Club. I think is that it gives us up on the the P2P transaction, the form. Actually, because now a lot of the funds are from the institutional investors, so they established LC advisor, a subsidiary to help the institutional investors to invest on their the assets. So they already give up on the the P2P transaction methodology, because the P2P requires that the investors to choose the ones, the borrowers to invest the money, to lend the money. So that is the most transparent form. So I think if Lending Club insists on this business model, it will not happen for the scandal. So for us, Dai always insists on to make sure the transactions between the individual borrower and the individual investor to make them to be peer-to-peer match. Thus, all the transactions are very transparent and clear. So no one can do some things in there they don't have the chance to articulate the transaction or something like that. So, and for us, I think it actually this scandal did not affect the P2P industry in China a lot, because it's just as Ning has mentioned, it's quite different market in China, and we have a lot of investors. We have a lot of cash there to fund the good assets, to fund the good channels, good products to invest. So yeah, that's a reality in China.
So we ask ourselves this question all the time at Arbor Ventures: what's next for alternative lending? Is it more specialty lenders? And I'd love to hear both of your opinions on this. Maybe you can start, Ning, on what is next over the next 2 to 3 years, and what's going to differentiate each one of the different companies?
Well, I think inclusive finance, consumer finance is a huge market opportunity and is underdeveloped in China, although we've seen many more players than a few years ago. The market penetration is still low. So opportunities like consumer finance, like rural microfinance, like supply chain financing, like leasing, so on, opportunities are abundant. And but I think every company should think about its strategy, how to really identify the segmentation, the niche area that it wants to compete in, because the market is indeed getting very, very crowded. Yeah, and the cost actually is very high to be a marketplace lender or just doing new finance in lending space in China.
Is it the acquisition, the borrower cost acquisition that drives up the price today due to the competition, or just maintaining the platform and all the aspects of originating a loan and servicing a loan and collecting?
Yeah, generally speaking, costs are much higher in China doing marketplace lending or consumer finance, because the credit infrastructure is still poor. Without a credit bureau, without credit scoring, you know, the cost associated with customer acquisition is higher, and also for risk management, there's a lot of fraud when you do online. There's more fraud, and so you need to develop a very good anti-fraud capability. And also, I think it's more costly to attract funding. Yeah, so the costs are higher in China. And also, when the market is very competitive, naturally, bad cases go to less developed platforms, making it more difficult for new platforms to do well in the market.
Thank you. And Cliff, what's next?
Actually, we think, and because Paipai is always focused on doing the business online, and so far we have observed a very clear network effect on our platform. If we have good borrowers and we can identify them and give them the accurate risk pricing, and we can attract a lot of investors and funds. That's a lot of investors and funds. It can attract the more good borrowers. So we have observed that network effect. And so the start point is the borrower. So we put a lot of efforts and time and cost to attract and evaluate our borrowers. But that's not very easy. Just as Ning mentioned, we do not have the credit scoring infrastructure. We do not have the credit bureau. And also a lot of data are separated in separate government departments. So we have to do a lot of the basic things to create our own credit scoring infrastructure and systems. So it's but now it's already be a barrier and a moat for us, because if you want to enter into the sector, say I want to provide very small consumer loans to the borrowers, you have to do that again and invest a lot. Paipai always focus on providing the consumer loans to the people, to the internet users, which are very young and cannot get loans and credit cards from the banks. It's a huge amount of people, about 300 to 400 million users in China who do not have loans, cannot get loans and credit cards from the banks. So it's a huge amount of people, and the Paipai is now, we already have 20 million of registered users, but it's still a long way to go. So we will still focus on those people and provide very good service to them to make our system to be more solid to pick up the good borrowers. Thus, we can also attract more and more investors and funds. So the business can grow faster and faster and bigger and bigger.
So I want to touch a little bit, Ning, on the diversification of Credities. You're much more than just an alternative lender today, but you've moved into wealth management. Love to understand the vision, the dream, besides alternative lending, and where you're going to take the wealth management for the future.
Sure. Actually, we are in two business lines, inclusive finance and wealth management. Inclusive finance is more for the borrower, helping the borrower build credit, establish access to financing. And the other business line, wealth management, is more for the investor. We realize that investors actually look for more than just one great product, P2P lending. P2P lending itself is a great product, risk well diversified, because it allows the lender to lend in small amount to many, many people. But the investor community actually, what they really need is asset allocation strategy, a solution about how to do wealth management, money management. So several years ago, we started to do this service. Helping clients construct their portfolio following asset allocation strategy. For high net worth individuals, for mass affluent, for like middle class. Actually, different customer segment requires a different solution, different approach. For example, for high net worth individual community, we have like offline high touch wealth management centers all around China, and we offer them like global asset allocation strategy, focusing on alternative investments, so on. But for say a small investor, like a community, like middle class investors, we offer robo-advisor. A few days ago, we launched a cool robo-advisor service called Toumi, RA. RA standing for robo-advisor, allowing small Chinese investors to, through mobile phone, get to global asset allocation. So that's how we do wealth management.
Fantastic. And Cliff, you mentioned credit cards. So are you also offering products beyond the loans to your customer base online?
Actually, we are, we are providing a service to the people who cannot get credit cards or loans from the traditional financial institutions such as banks. Actually, we think that it's a huge market in China, and also is a part of the inclusive financial system the country wants to create. So. Because we already have done those things for quite a long time, and we have the methodologies, we have the systems to do the business. So we will still focus on providing the consumer loans to those people who cannot be served by the banks. And just as I mentioned, it's still a very long way to go. So we still need to invest more and more money into it.
So one of the last questions I want to hit upon is, what is the crystal ball of regulation to come in China around alternative lending? Ning, I'd love to start with you and get your opinion as what does it look like 2 years from now, and what does the Chinese government do about regulation?
Yeah, I think the industry actually, alternative lending or marketplace lending, has been around for 9-10 years. Companies like Paipai and CreditEase have been really doing a lot of innovation, and there is a lot of best practice in the market. And the regulators several years ago started to make the guiding principles known to market practitioners, and we see that smart regulation is happening in China, meaning like, the regulators allow a real innovation to happen at the same time shutting down fraud cases. Recently, you may have heard about several bad cases, but actually they are not related to internet finance or FinTech. They are basically bad guys using technology and business model innovation to do better things. So we should definitely separate them from the real innovation. As the regulatory framework becomes better and better, for instance, marketplace lenders are required to work with banks for funds custodian, which means in the future, all the P2P lending transactions will take place within the banking system, making sure that borrower, lender identity is real, and also all the funds flow are trackable, so on. And platform funds and client funds are separate. So all such measures will help the industry become better and better. The model itself, marketplace lending, is really robust. It's actually a very good model, which we believe will be here for the long haul.
Great. Cliff, and what's your view of where regulation is going?
Actually, we expect the regulation to come out for quite a long time.
We've all been waiting.
Yeah, because of the absence of the regulation, there's a lot of bad guys. They, come to the internet and they cheat the investors and make a lot of bad things on the internet. So we hope the regulation rules to be issued in maybe 12 months. We think, I agree with Ning, and the regulators are now smarter and smarter. They have more channels and ways to learn about the business, to learn about the industry, and also for the P2P industry, they have already learned about the business for about 5 years, so they know very clear about how the business is. So we expect they will issue very smart regulation rules to make sure the system to be, the market to be healthy and to be strong.
Well, great. Well, thank you very much in the audience. I mean, today we have two of the most successful companies in the alternative lending space in China here on stage, and I think we should give them a big round of applause, and thank you very much. And it's been an honor to moderate with them.
Thank you.
Thank you.